Markets at the day's low. Mid-cap index is getting butchered. Names that are heavily owned are seeing selling pressures closer to the 7,000 mark now for the Nifty. Ruchit Jain, equity technical analyst, Angel Broking, is now joining us this afternoon. Ruchit, good afternoon. What do you make of the market? You think that we are likely to see support at the previous lows, or you think this time around chances are that we may go below that level?
Well, good afternoon, Pankaj. Pankaj, overall, yes, we again have a lower top has been formed at yesterday's high. Even last time we spoke that, on the daily charts, earlier we had a hammer reversal pattern, but the weekly charts, there were no reversal pattern. So any kind of pullback rally would just be a pullback within this low top, low bottom formation. Now what we have seen that January low, which was the support for the markets around 7240, that were breached in first, second week of February. And now after this pullback rally yesterday and day before yesterday, that 7240 mark, which was earlier a support, has now acted as a resistance. So supports are becoming resistances. This low top, low bottom formation is still continuing. So unless we see any signs of buying coming in again with positive market pair, which is not there in last couple of days, so I think this downside momentum could get continued. Lower side support would again come around around 6950, 6940. The way we saw selling in the month of January from 7,600 to 6,900, I don't think that we would see that kind of fall again now. Probably it would remain more of a range bound with some negative biasness. Stock specific moves would be there. So I think for traders, those who are trading from short term perspective, it would be very difficult to catch a trended move in Nifty now, although the biasness would remain negative, and there would be more of a stock specific opportunities over here in near term.
Right, we've seen very big volumes in Nifty in the past 1 hour of trading session. So when we are going down with decent volumes, and when we are going up, it's very, very shallow in terms of volumes. You think that itself tells us that the favor or the trend is towards the negative side, even if there is a decent sharp pullback?
Yes, Pankaj, generally volumes tend to go with the price, tend to go with the trend. And since we are already forming this low top, low bottom formation, and as you said, in recent up move, the volumes were not that high. And again, in correction, the volumes have started increasing. So that's a bit negative sign. And that is only indicating that the trend still remains down. So those who are, doing any kind of bottom fishing over here, that the trend has changed or anything major upside swing could coming, I think they could be disappointed over here. Definitely pullback moves would be there. But as we have also earlier said, these pullback moves are just an opportunity to exit unless we see any kind of reversals formation on the larger time frame chart, on the weekly charts or monthly charts. This is just a sell on rise market with negative biasness being continued as we are seeing in last couple of days.
Right. What's your view on Jet Airways? It's down 5% in the last 30 minutes. It has lost about 6%. You think first signs of weakness coming into this name?
Well, if we observe last 10-12 trading sessions, it has formed a range of around 500 to 550, 560. Now this range is near the 50% retracement of this entire up move which we had earlier seen. So that's why I think this is holding this support level. In case if we see a sustained move below the lower end of the range, or even if we see the closing charts and if we see a closing below 520, then that would be negative for the stock, and this could lead to further downside selling pressure in the stock. So it's very important that the stock, if it closes below 520, that would send some negative signals that the continuation of the downside momentum which was seen from the highs, that could get continued in near term.
Right. Some of the other names, mid-cap pharma companies, names like Aurobindo, Strides, Sarshon have been very, very weak. DV's Lab, you think they'll continue to see selling pressure?
Yes, these mid-cap pharma names should continue to see this selling pressure. As of now, we have not seen any buying coming in. And what we had observed in Nifty, that the upside momentum mark was coming with the lower volumes and the downside is with higher volume. The same thing has been seen in these mid-cap pharma names also. The low top, low bottom formations are there in place on all kind of daily as well as weekly and monthly charts. Apart from that, the recent pullback move, last 4-5 trading sessions, what we have seen a minor pullback in Nifty. These pharma names, they had not shown that big up moves. So on up moves, when the markets are given a pullback, these are, these pharma names are continuing to stay sideways. So that is a negative sign that rather than price correction on the upside, these are showing only time correction along with the Nifty. And when the markets are resuming the downside momentum, these are the first stocks, these are the stocks to lead in the downside moment. So that's a negative sign. And this pharma names, mid-cap pharmas, mid-cap PSU banking names too, what I'm observing over here, even the same has been seen in Bank Nifty itself. Rather than giving a pullback move along with the Nifty, last 8-9 trading sessions, Bank Nifty was trading in a sideways narrow range. So it was a price correction rather than a time correction what we have seen. So I think these mid-cap stocks would continue to stay under pressure in near term. Traders should clearly go with the stock specific moves. On the positive biasness, we are looking that oil and gas companies HPCL, BPCL, IOC in today's trading session, they have shown some positive movement. Now this positive momentum also is coming from their medium to long term support zones. So I think going ahead, pharma, banking, these all would continue to remain under pressure. Oil and gas pack is one pack where we are seeing that some kind of pullback rally might be seen in this week and the next week.
Right. What do you make of BHEL? 93 rupees at a new low. You think it's opening now that it's closed below 99 where it took support last time? Channels are opening up for levels like 70, 75.
The chances are quite there that it would go up to 80 or even lower than 80 levels. The crucial support now here, Pankaj, if we see on a daily or weekly charts, was 2013 low, which was around 96 rupees, and the stock has not given any respect to that 96 low of 2013, from where we saw the stock moving higher from 96 to 300 rupees. So that was a crucial support which has breached in today's session without showing any kind of pullback move. This shows just the kind of the selling pressure the stock is under. I think this low being breached, there could be continuation of this downtrend, and 80 or even the levels below 80 could be seen in this stock.
Right, but is it like still a short, or you would wait for any meaningful bounces to short? Because I was looking at the institutional holding. FI holding is not that high, DI holding is not that high. So it's mainly HNI as well as the short sellers that you are actually trying to go with.
The move is very much impulsive in this. If we observe, last from July 2015, the stock has not shown any kind of meaningful bounce. So if we wait for, that we sell the stock on a pullback rallies, actually the pullback rallies are not there. The stock has shown time-wise correction. It has gone sideways after any kind of downside momentum. From 285 to right now up to 93 rupees, I have not seen any kind of meaningful bounce that the stock has bound about 8 to 10% from its lows. So I don't think that would be any opportunities on bounces to sell this stock. It's just you just keep a stop loss above the swing high which was made couple of days back. Keeping that high, you go short in this stock, and at the lower levels you would again find an opportunity to book profits and cover your positions.
Right, Ruchit, just stay on with us. We're taking a break. Coming back in 2 minutes. Markets continue to be under the weather, down about 90 points, closer to 7,000 level for Nifty. 84 points down for the Nifty, 7,025. But again, in the mid-cap space, we have seen some amount of selling pressure. Let's just pull up Aurobindo Pharma. It's now down 6%, 613 for Aurobindo Pharma. Looking in extremely weak at this point of time. We spoke to Ruchit about it. Let's welcome in Shrikant Chauhan, technical analyst at Kotak Securities, also into the discussion. Shrikant, your view on the entire mid-cap space. Names like Aurobindo, Strides have seen selling pressure. We spoke to Ruchit, and he believes that they are largely in line with what markets are doing with the negative trend.
See, like here our view is that there is like a lot of profit taking or liquidation of positions, because the way the stocks are falling, like Aurobindo Pharma, which has like fallen from the highest high of almost 850, now it is currently trading at some 600 kind of levels. It clearly shows that there is like huge amount of unwinding or liquidation of long positions, but frontline pharma stocks are definitely they are in line with the trend of the market, or in fact they are outperforming to the broader space of the market. but we are like advising our clients to stay away from the mid-cap pharma, at least for the time being, because whatever the correction is now going to come in the market, that will come in either in defensive stocks, I mean to say sectors, and especially in that people will try to sell first mid-cap stocks and then later on they may shift on the frontline stocks. So Lupin, Sun Pharma and Dr. Reddy, they are still into strong hands, but I think Aurobindo Pharma or Ajanta Pharma kind of stocks, they are under a lot of pressure.
Right. What do you make of the recent sell-off that has come in because of HDFC Bank? We don't see that normally, right, Srikanth? So HDFC Bank selling over there. You think it's slightly worrying for the bull if it continues for a while because they have heavy weightage and heavy FII holding?
Right, Pankaj. I think it is the what we can say, if we correlate this with the past few such kind of trends, then one thing is very clear, that whenever the markets are very close to their extreme levels and when where there is a lot of panic on the street, most of the time we have seen that selling comes into HDFC or HDFC Bank kind of stocks, which are like very, very strong candidates, and they always falls whenever there is a extreme panic on the street. So I am of the view that whatever the sell-off that we are going to see in the near term, maybe after the closure of the event of budget, if market falls by say like 200, 300 points, then in that, if we see sell-off in HDFC as well as HDFC Bank, then certainly that will be the last leg of correction for the market. After that, I'm not saying that the market will bottom out, but definitely we are going to see a major bounce back in the market. So if these stocks are falling, that means it's a positive or good news for bulls, I can say.
Right. Ruchit, do you agree with that? HDFC Bank, maybe ITC, which are heavily owned names, are falling, and that essentially will lead to should be the final leg of the market?
Yeah, definitely, Pankaj. We've seen that these stocks, these defensive stocks, HDFC Bank generally comes out for selling in the last leg of this of the corrective move. And it's in fact a good opportunity for long-term investors. Although from trading perspective, these might offer good risk-reward ratio, but generally, when there is an impulsive upside up move in the markets, these stocks give very few opportunities. That they show a decent correction to buy these stocks on dips. Now, since we have seen the last 10-12 months markets have corrected, these stocks, both HDFC Bank, they have started correcting now, and at lower levels this is the opportunity for long-term investors to get in rather than staying away from these stocks now, because they have not fallen, that they'll fall now. This is very less opportunities you would get such that from the highs they would correct so much, they would correct about 15-20%. This defensive, I think it's a good opportunity for long-term traders to start accumulating stocks such as HDFC Limited, HDFC Bank.
Right. Ruchit, stay on with us. Srikanth, just stay on with us. About a minute remaining for closing, slightly less than that. 87 points down for the Nifty, Sensex down 300. So definitely back-to-back days of selling pressure coming in. And yesterday, the gross number of FII, DIIs did not indicate that markets can fall so much, or that amount of selling can just come in because of that. That's the closing bell. 88 points provisional basis. It will change in the next 5 minutes. We'll get you those details. Bajaj Auto down 2.5%, Hero MotoCorp down 1.5%, Dr. Reddy's down 2%, Ultratech down about 0.25%, ACC down about 0.76%, 1,234, Grasim down 1.3%, 3,362, Bosch down 2%, 16,500, SBI down 1.1%. ICICI Bank down 2.6%, NTPC down 4%, 118 for NTPC. Remember that retail offer comes in today, but I think majority of the institution buying is done. BHEL down 5%, 93.4, ITC down about 2% or so, 287. Top losers, BHEL 93.4 as far as BHEL is concerned. NTPC down 4%, 118 for NTPC. Tata Motors down about 3.6%. That was the third top loser, 307 for Tata Motors. Hindalco down 3.5, 66 rupees. Kane down 3%, 122. Vedanta Limited down 3%, 70 rupees. ICICI Bank down 2.6, 186, 187 for ICICI Bank. HDFC Limited down 2.6, ONGC down 2.6, 209. Tata Steel down 2.5%, 247. Bajaj Auto, IndusInd Bank, TCS down anywhere between about 2.5% odd. Srikanth as well as Ruchit are still with us. Srikanth, let me come to you. ICICI Bank 186.87. No point of bottom fishing.
Not at all, because the way the stock is falling and the way whenever like there is a recovery in the market, it clearly fails to cross its previous highs. So one thing is very clear, that the stock is into falling top, falling bottom series. There is no as such any specific divergence on daily as well as on long-term charts. But if you go through with the long-term charts, then there is very clearly we can see that the stock is trading below the important crucial mark of 210. Below that, the stock is having support only around 150 or 155 levels. So we are targeting the levels of 150 or 155 in the near term, and that's why we are not advising our clients to look for any bottom fishing kind of opportunity.
Right, as you are expecting 155, which is still a substantial 20% lower from your, or maybe about 15%. Is it worth giving a trying to be short on the name, or you would wait for any short covering rallies before you do that?
Pankaj, I think definitely we can go short on ICICI Bank, because
irrespective of the underperformance.
Irrespective of the underperformance, because now the next fall which is going to come in Bank Nifty is going to come because of private banks. IndusInd Bank is weakening. Yes Bank is struggling to sustain above the mark of 720-25.
And we just spoke about HDFC, which is also actually
exactly. So that is why like the next round of selling what we are going to see is especially from these private banks, and that's why like we are advising our clients to go short on IndusInd Bank or ICICI Bank as well as.
Shrikant, I was just looking in at the shareholding pattern of ICICI and some of the other private banks. They are still quite heavily FII and DII owned. That itself is a risk despite the underperformance.
I think the broader space is facing the same problem, and that's why like we have seen very first good amount of sell-off in all PSU banks where the quality was the concern, and this time now because of the overall weakness in the markets and the price gap, I'm to say, between PSU banks as well as valuation gap between PSU banks and private banks. I think because of that also the selling is coming. But in that, if you correlate the stocks with each other, then ICICI Bank stood first. I'm to say it is highly underperforming stock, and that's why I think a lot of selling pressure is in ICICI Bank. But otherwise, I'm of the view that if the stocks falls to 150 levels, and if Bank Nifty falls to 13,200 or 300, which is the next target for Bank Nifty from our side, I think if it falls to those levels, then certainly around those levels we should look for adding first private banks to the portfolio.
Right. Ruchit, what will be your view on ICICI Bank? You think it can underperform like Shrikant?
Well, Pankaj, we are already negative on ICICI Bank since quite a long time. Probably this lower top, lower bottom formation is still there, and we have not seen any kind of reversal pattern being formed. Any kind of pullback rallies, we have seen that it's just a selling opportunity in this stock. Well, rather in the banking sector, what now we are advising our clients here within this private sector space is to go long on the Axis Bank and go short on the ICICI Bank. That would be a pair trade, I think, which could work well in near term. Now, Axis Bank, what you've seen in last 1.5 months, have started consolidating sideways. It is trading near its medium to long term support zone, and after a downside trend, when we see such consolidation, so that generally indicates that the selling pressure has been exhausted over there. Whereas we have not seen any such sideways formation or any such major reversal patterns being formed in ICICI Bank. So I think ICICI Bank would continue to go down from current levels also. If anyone has to take a trade over here, I think it's a good thing to do a pair trading by buying Axis Bank and selling ICICI Bank.
Right. Ruchit, thank you so much for taking out time for us. Always a pleasure talking to you. Shrikant, just stay on with us. We're taking a break. Coming back in 2 minutes, I want to discuss some other sectors on the other side of this break. We have the provisional closing, the final closing with us, just marginally above the 7,000.